All right, so there was a question regarding appraisals. One of the viewers mentioned that a lot of times with retail buyers paying more than the asking price for a house, what happens when it comes in below the appraised value? Well, that's up to the buyer at that point if the bank requires them to make up the difference. So banks are lending on appraised value or purchase price, usually whichever is lower. So it's really up to the lender to make that decision, because they're going to loan on a percentage of value. So they could go with the appraised value and then readjust the loan to that amount, or they could just require the borrower to bring in the difference between what they are paying for the house and what the appraisal amount is, if it comes in lower than what they offered to pay for it. Then the second part of the question was about builders and subdivision builders, and that they are getting houses appraised for whatever they want. And that doesn't happen. That's not true. So a home builder doesn't appraise the houses. The banks hire an independent appraiser to go in and appraise houses. Builders do not appraise their own houses for the purposes of loans. That's done by the lenders, and lenders choose the appraiser. Back in the day, pre-2009, we had choices as buyers that we could choose appraisers, but the choice of an appraiser used to be on the buyer, not the seller. It was in their ability to do that, and nowadays the banks choose the appraiser. So that's not up to the builder. The builder does not appraise their own properties. They do set prices, and they can ask whatever they want for a property. Then the next part of the question was, why is a house on the back side of a subdivision, outside the subdivision, same square footage, same finishes, things like that, why can it, or how does it sell for less than a house in the subdivision? Well, it depends on the area, the location, and the subdivision. If it's a nice new subdivision with a lot of amenities, things like that, the houses in that subdivision might appraise for more than the surrounding houses that could be older, could be less desirable, and have no amenities. So that's one way. The other way is wherever you're building that house. You'd mentioned you're building a house behind a subdivision, and it's appraising or selling for less than the subdivision with the same finishes. Again, it depends on the location. If you're in a location where all the homes are lower and or less valued, less than the houses in the subdivision, they're older, it's not as desirable an area. It could be in a different school district. Chances are it's not, but it could be. There's a lot of reasons. Could be access, could be location, and again, could be the amenities. So generally, a new subdivision, potentially in higher end homes, that is going to potentially be worth more and appraised for more than the surrounding homes and surrounding neighborhoods. Now, that being said, in some areas, a new subdivision can bring up house values in the surrounding areas, but it's all depending on the area, the location. Real estate's hyper local. Every situation's different, but that's generally what it is. A subdivision is going to protect value. A new subdivision is going to protect values better than the surrounding neighborhoods that might be older homes and could still be smaller, less valuable, lower end than what's in the subdivision. So it doesn't matter what you build in that neighborhood, it's only going to sell for so much. So that's part of knowing your market. You really got to know your market. You need to make sure that you build within the price threshold of that market, that area, that neighborhood. Every neighborhood is going to max out. Some neighborhoods, depending on where it's located, when you redevelop, you can get more money than the surrounding homes. But again, that's very hyper local. So you really need to know your market. You really need to dial in on that. And you really need to understand why a new subdivision sells for more. Is it location, type of product, amenities, that kind of thing. And the bigger the subdivision, the more likely it can protect the value. And even small infill subdivisions, like I like to do, you can go into an area and create your own market and create your own value within existing areas. So it's very location dependent. It's hyper local. Finishes do matter. Quality of construction does matter, but it's more about the surrounding area and what that environment looks like and what the market will pay for a product in a certain location.